Bitcoin is the king, right? All these other coins, all these other projects, they're all related to the flows into and out of Bitcoin.
In today's video, Morgan Creek Capital Management CEO and CIO, Mark Yusko, talks about the Bitcoin bear market, global macro, and more.
I am concerned that everyone wants winter to be over, but it feels to me a lot like the physical summer months into the fall months of 2018, where Bitcoin had fallen from 20 kind of all the way down to 6 and just kind of bounced along 6,000, but it made this crazy pattern called a descending triangle, where every bounce off 6 was lower. And then ultimately on November 14th, I think, or 13th, we busted through that 6,000 and we were at 3,200 almost instantaneously. And I do fear that. I'm not saying that's going to happen, but if you look at this pattern we're in right now, where we're bouncing off 29 and each bounce is lower, that usually doesn't end well. Again, not a prediction per se, but it does make me a little nervous. There is a logic to the up move of the cycle being smaller each time. In the 2009 to 13 run, we were a science project. Right? I mean, there was no there. There was very little participation, very little volume, a lot of manipulation. And in particular, that big price spike, in hindsight, most of it was manipulation. So it wasn't real. So when now people look back at that and say, oh, well, we should go up 40x. Well, no. I mean, you can't manipulate a $600 billion asset the way you could manipulate a $6 billion asset. Just can't do it. So then you go to the 2017 cycle and it was a 20x move, and everybody's like, oh, well, we should at least go up that high in the 2021 move. I'm like, well, no, again, half the size of the market. And so there's a natural logic to me that if we go from 1,000 to 20,000, okay, that's a 20x move. And we go from 3,200 to 70,000. That's actually coming close to that same type of move. And the idea that we look back to that 13 that was just price manipulation at Mt. Gox, it just doesn't make any sense. So I think the cycle is going to be with us forever. And it's because of the way the halving rewards work, and Bitcoin is the king, right? All these other coins, all these other projects, they're all related to the flows into and out of Bitcoin. And that cycle certainly impacted by macro factors. And we can make the case right now. You and I could make a really strong case for why Bitcoin is digital gold, right? And that gold has been the perfect store of value over long periods of time relative to the dollar. But that doesn't mean that you can't go for long periods of time where it goes the wrong way, right? The money supply expanded from 2011 to 2019, but the price of gold went down. It went from 1,900 to 1,000. Why? Well, there's all kinds of reasons. JP Morgan spoofing the price of gold and all kinds of other things. But ultimately, over the long period of time, if you zoom out 20 years, 30 years, 40 years, 5,000 years, for 5,000 years, an ounce of gold bought a fine person's suit. It's a perfect store of value. And if you look over a long period of time, right? Everybody says, oh, but the last 6 months, Bitcoin's down, money supply's up. Well, right. But zoom out, go back to 2 years ago, money supply went up 50%. Price of Bitcoin's up a little over 50%. It's pretty logical. If it's digital gold, and gold is supposed to be the store of value, and there's money migrating from gold into this digital asset, it's going to play that role. It's also not surprising that for the first time in 13 years, the Fed is constricting the money supply. So assets that are linked to money supply, gold, digital gold, might be affected. So 100% agree there will be impacts by other factors, whether that's new capital coming in from institutions. That's one narrative that, oh, that's going to get rid of the cycle. No, it's not. Institutions are just as dumb as retail investors, right? The history is replete with examples of buying tops and selling bottoms. They are not like these disciplined, following funds that always just keep adding to the asset over time. They puke it out at the bottom, just like everybody else. The thing that's important it's the difference between price and value. Right? The value of any asset is determinable, right? Whether it's the value of this shirt that I bought, or whether it's the value of this building I sit in, or whether it's the value of a company like Amazon, which is not really a company, it's a network, right? Amazon doesn't make stuff. They match buyers and sellers and take a cut. Now they do some logistics and other stuff, and I guess they make some knockoff products. Bottom line, they're a network. Same thing with Apple. Apple, yeah, they make stuff, but no. The network effect is that you and I have a phone and we text back and forth and we buy apps. That network effect grows the bigger the network. So the Bitcoin network is determinable. We know how many nodes, we know how many users, we know how many wallets, we know how many transactions, we know the size of the transactions, and we can plug all this stuff into a Metcalfe's law model, and we can actually get a curve. And that curve can tell us the value. But people don't care about the value. People care about the price. People care about the price. Like if you and I trade 100 shares of Microsoft stock, the price that we see on our phone is the price. But if I had 1 million shares of Microsoft, that was not the price. You would not pay that price for 1 million shares. You would pay a much lower price. And if I had 100 million shares and tried to sell it, it would collapse the price. So the same thing is true with Bitcoin. If two people trade, 25 sats, it's not going to move the price. If people try to move a large amount, it will move the price. And what happens is, if you think about value accreting very slowly, the price follows that value until it gets high, and then speculators come in and push it higher. And then the gamblers come in and push it higher. Then the levered gamblers come in and push it higher until we reach December 2018, right? 17, where the value based on the network number was 10,000 and the price was 20. There's no question it was going to go back to 10, but worse, it always goes through fair value because people get afraid and then they sell. And we went all the way to 3,200. At 3,200, it was a screaming buy, right? I mean, I went on TV and challenged anybody. I challenged anyone in the world. We will take Bitcoin for the next 10 years. You take the S&P, $1 million charity bet, December 6th, 2018. No one would take it. Crickets.